I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is November 15, Wednesday, 2023. So we had this beautiful day, price pushing up exactly what I mentioned yesterday to the specific exact level. So we talked about that gap right there, and I'll show you right here. I was mentioning yesterday we go straight up right to that gap right there above the purple gap, right? But then there is a old weak gap right there, and then we would come down, right? So we've accomplished this exactly to the same specific level, and then came down here to we're sitting right here now of all this. So beautiful day. You know, just amazing when it hit that gap. If you were trading live at 8:30, I was ready 8:30 today. And then, I caught it off definitely on the 15-second chart. I wouldn't have been able to catch that on a higher time frame than that. But beautiful, 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 man. So price got to that gap because there's no trading in that gap. You see that gap? I know there's this is probably obvious, but there's no trading in that gap. The price fell from this close to this high, right? Or the open, I should say. And then that was what was left untradeable, right? And then looking at the 4 hour here, I'm going to zoom in for you. You can see very clearly that we get right to that gap right there. All right, get to that gap right there, and then lower low, lower high, and look like we're about to sink through it. Obviously, we have this big 4 hour imbalance right here, right? So let's go into a smaller time frame and show you what's happening. So right here, we open up, and all those higher lows from yesterday, you can see higher low, higher low. That was the control of price. Well, I'll get to that in a second, actually. So higher lows, higher lows. Then you have this batch of higher lows right here, and then finale. Literally all the way. I mean, look at this whole run. This whole run from here down here was this trend. Beautiful fucking trend, actually. Taking advantage of this whole trend. Just keep buying higher lows. You know what I'm saying? Until you're reaching a real target. Now, you're probably asking, well, how do I know what the real target is? Well, we have some overbought areas here. You don't need the indicator to tell you that these are overbought areas, right? These are all overbought. These all lower highs, these gaps right there, like these are all overbought areas. I don't need an indicator to tell me that, but what the algorithm specifically is looking to balance that price, and obviously we went right through it, right? And then took out the high of that candle, and then got into that gap beautifully, man, fucking beautifully. So anyways, higher lows, then finale, get to that gap right here. I'll even show you on a 15 seconds so you can understand. I mean, absolutely murdered this fucking market today. And I don't know who else is saying what's going to happen the day before like this, but okay, so by the way, you're not going to see it on these time frames, but the gap is right there. See that on the 15? See that gap right there? So when the price is 8:30 shooting up, obviously I'm not trying to buy this, but I'm looking for a reversal at this point. And someone will say, well, you're trying to catch tops and this and that. Well, let's be realistic. I mean, eventually this fucking thing has to retrace back down, right? I don't mean back down to break this low or anything. I'm just saying that, this bull trend right here eventually needs to exhaust, right? And this would be a perfect scenario if it came to this gap and hit that. I mean, that's an extreme, right? Now, again, I'm not saying it has to retrace, even deep, but for a nice sell or some type of, exhaustion, this is a good zone. I mean, obviously. But at some point, you have to be able to be realistic too, right? But anyways, so when the price is up here, this is a 15-second chart. Price comes up and hits it. So I understand that I'm watching this. As soon as this price comes down from that gap, so we came up to the gap, a hair above it, and then we come, a couple points or whatever, 3 points, 2 points, and then we start coming down with it. This wick, I'm in it. I'm pushing that button. Now, here's the thing. guys that used to be in similar groups of mine, or back in the day, we used to take the CPI trades all the time, right? We get our heads blown off, and sometimes, and most of the time, we'd catch it. But in this scenario here for this news, I don't look at it as that, because this is a specific level. This is not random for me. I'm not just pushing the button because I feel it's coming back down. This is more of a confidence trade where I have a specific level, right? So with that understanding, you can see the next 15-second candles are constantly selling. Go to a 10-second for you even. You're probably like, dude, I don't have seconds. Well, then you're not going to be able to see this. You could have done it on a 1 minute, but you'd have to be really good, But I mean, why? Why not have seconds if you want to make a living off of this? But you can see here, right here, bullish candle up there. This pushes up and then immediately starts to turn bearish. I'm already pushing the button because I can see it, right? This is something you got to be able to see. But I'm using that in confluence with that level. I mean, I'm not sitting here telling you the day before that exact specific level for nothing. All right. So, what are we doing here? So here's the sell. My intention of this sell, and it constantly going, is, let me go back to a decent time frame. Go to a 1 minute even. My intention for this trade is to take it below this low, which would be, if you look on the 15-minute, it's that low right there. I want to take it below that, and in doing so, you get 3 drives, 1, 2, 3, and then that was the goal for this trade. Okay, done. I need to take profit, because here's the thing: you could take a bunch of little losses, but if you don't take the profit on the trades that you actually win, or you let it go back on you, well, then you have a negative day. Someone texted me the other day, or in here, saying, an email saying, why don't you take any losses, or why don't you have losing days? I'm like, I have losses. I don't talk about them too much, and I also don't have a lot of losing days because of this specific rule, which is what? Take profit. The idea? So look at the 1 minute, look at the wick. So the idea of this trade right here is, what is it logically going to do, or where is the liquidity? Okay, so for here on the 15-minute chart, I have that low right there. I understand I've got this highlighted right here, which is this liquidity sitting right there between 2 in the morning and almost 5 in the morning, okay? You can see that. It's pretty perfect, okay? So with that, in that case, I don't have to take this trade all the way down, because it's not even the 9:30 open yet. I don't know what's going to happen. So I have to allow more data. That's why you take this profit. Okay, so that being said, we took out that liquidity and we're inside this 3 down candles right here. So I need to take it out. And we also have 3 drives here. 1, 2, 3. See that? So for me, and sometimes I'll make that a reason to then get out of the trade, or sometimes I'll just take it after liquidity. But in this case, it was pretty obvious what was happening, and today was actually pretty obvious, and it's still coming down. I'm doing the videos early now because I don't like waiting. I usually just wait for the day to be done, and then I screenshot and do the video. But I have to be. I'm busy doing other things and other projects right now, and I want to be kind of done early. So, anyways, I've been done, but anyways, I won't get into that. But here you go. So then right here, got this low right here, right? And then we retrace back up, right? Doesn't take out the high yet. Then this bounces right here. Now we're getting into the 9:30 open, okay? So 9:30 then pushes the price down here, takes out that low. Okay, cool. So if you thought this was a buy, you could have bought that, but you wouldn't be married to this. If you took this buy, I would have took it to either that high or these highs, obviously, right? So that's actually what happened. But I want you to understand what I have these zones for. I have this yellow zone right here, whatever color that is, orange. This is a resistance block right there. So I'm highlighting it and I dragged it out. I can see it very clear on the 15-minute time frame. You can see that. So the price breaks through. We're anticipating some type of break, a displacement and break and retrace. So what my goal is I'm trying to break structure. If you look on the 15-minute, for example, this is easier to see. I have this higher low made that higher high. Then we break through it here. Okay? Well, that's over here. But we're anticipating this. Not only do we see the liquidity, but we're anticipating this move for it to be a leg, meaning the leg from here to down here, for example. Then take out that liquidity, retrace back up. Okay? So now you have a lower low, lower high, and then continue with a lower low. Then we came back with a lower high, and now we just made a lower low while we're doing this video, actually. Right there. See that? Well, it's the same level, but it's a lower low. You get what I'm saying? So the leg, this is the leg. This leg here that actually breaks the structure is going to have a couple drives down. So not just 1, 2, 3, not just this pocket of price. This whole pocket of price right here. This is lower low, which is manipulation with the 930, and then it retraces back. It shakes out. So this is like it's a little consolidation. It's the first phase in selling technically, or well, in this case, it's the second phase in the leg, but it comes back up and then wipes out that high. So as of 9:30, and we are here, we have identified that resistance block right there on the 15-minute in the orange, and on the 30-minute, this blue zone is an imbalance. So let me go to a 30-minute so you can see it. I have another screen that I have every time frame up on different screens, but this one is the one I use. This screen you're looking at is the one I use for this screen. Okay, if that makes any sense. So you can see that I've highlighted the 30-minute imbalance right there. So the point of this is that not only does it can come back up here, but I wouldn't want to see it go above these areas, right? Because this is a form of resistance, okay? And we have a control of price, which is right here. Right there, right here, when we come down like this. So this is technically right here, a break right here, because this was actually support, this was resistance, support, support, support right there. These three levels, these three higher lows, we come up, we break through it. So this is actually the beginning of the break, technically, right? And then at the beginning of a break, that will sometimes be a control of price action, meaning that the price will never break above that area. I'm talking about this low to this high. See that? See this low and this high? See how the price comes down and then it comes up, comes down, comes up, but look how it comes up and doesn't break that. This price control, I call it price control. I don't hear people talking about that really ever, but that price control is the same thing as this price control we had on CPI yesterday. So for example, if I just, oh man, I try to make this video simple. If I go to a 5-minute here, you'll see just this is the CPI right here. So you see how this makes a high and then makes a low, and then makes a high and then makes a low, makes a high, low. This never break. This price action from high to low is controlled. They control the price with this price action. It's very common in very bullish scenarios. And then in this case, this would be very common in very bearish scenarios. Okay. So let me go back to a little extra tip there for you. But so that's, and I've seen this pattern in price action a million times, so that's why I understand. But so anyways, back to this. So you have that, well, you see, you can't see that resistance block on the 30-minute or higher, but on the 15-minute is very clean. Go back to a 15-minute. Well, actually, before I do, you can understand that imbalance on the 30-minute. Pay attention while we go through price action. So, anyways, now 9:30, it took that out, and then it popped up here, took that out. Now, for me, when this takes out, I'm not involved yet, but when it takes out this high here and doesn't go above, I understand that just wiped out liquidity right there, and we're looking to rush to finish this leg or to come down and take out the other liquidity, which I have highlighted. Let me switch this time frame because I drew it on. Well, Just remember, this is a 30-minute imbalance right there. But as you see here, this price action that I have highlighted with a liquidity line right there. So the goal here for me is to get to this. I don't give a fuck if it's bearish or bullish. The 100% goal is to wipe this out because it's just too recent of liquidity, and it's also the Asia. Well, I would say more obviously London. This is the London liquidity sitting right there, and we obviously wipe out Asia too. Don't get me wrong, but the goal is to come down here as a minimum for this trade idea. Okay, so we have this low, and you thought this was the lower high, so we should make a lower low. So why would it go above that high, dude? Well, the problem is that this is just a pocket of consolidation price. You will get a shakeout. You will go above and below liquidity by a hair and still go the other direction. I'm okay with that. Matter of fact, I prefer for them to take out that piece of liquidity in this period. In general, I would not like that because I would like them just be simple, lower low, lower high. This doesn't work that way. But I would like to wait for a trade to take out liquidity and then look for that trade to then take a trade. Because if it hasn't taken liquidity, in my opinion, then the manipulation still hasn't happened. And we are basing our ideas off of that. Anyways, not to beat a dead horse. Long story short, price shoots up here. We take out that high. This is live price. We're in the resistance orange area on, see the 15-minute. And I know we just tapped in onto that 30-minute imbalance. All right, the 30-minute imbalance sets from here, this high, to that low. That high and that low makes this imbalance on the 30-minute. Very clear. So we pop in. Not only do we pop in, first time popping in, so if you look at the 15-minute, you can see we pop in right there with this candle here. The 15-minute pops in for the first time, and then it sells down aggressively. So that's now here. Okay, so as the price is shooting down, I push the button. This is a manual confidence trade. I don't need retest. I don't need any of that. I'm literally pushing the button. But I'm showing it to you here in the sense that when the price comes down and retraces back up, it goes back into that up candle. You see how it taps in and then it sells off? Well, that's the idea. The idea for this trade is not hitting a home run. This was my home run. And I was good. But this would have been the next home run for me, actually. But this is too early. And the reasons why I like these trades early is because they move faster. And you know, even if you were to use an indicator like this, look at the high of the wick. It shoots right above, right there. It's sitting right there, right? And then it shoots down. Okay, so this manipulates. And if you're sitting here trying to buy every single one of these, that's not the way to do it. You'll fail and you'll have too many losses. This is 3 drives down. If you did, fine. Okay, I mean, that's not a good idea. But here, now it's literally on the oversold side. We have 3 drives. We have taken out that liquidity, which is that low. I should have drawn it. I know, I'm sorry. I do a pretty bad job sometimes of, I know where it is, so I don't have to. It's only visual purposes. So that low was important. Okay, cool. But now you have 930, so you want to kick back. This price here, action, I want to take it to where? I want to take it to this liquidity that I've outlined already and mentioned to you. All right, so once we take that, this is, for me, this is a good break. After this is a break of structure right here, because this higher low made that higher high. And this higher low made that higher high. So we have order flow there. So boom, that's a break for me, right? Now, it could have kept going. You don't fucking know. Like Dow's crazy ass. But again, we are understanding that we are at the top of possible a reversal. Okay, so that with that logic, listen, with that logic, you can, this trade right here to down here to take out that liquidity is the idea. And from there, what is my next trade? Boom. I take this trade here, and I actually lose here first. I take this trade here, and then it was bouncing up. And then I was like, all right, I want to take this trade to wipe out the sellers here. And that was my only idea that I had, because I'm trying to get lower low, lower high structure. I don't know that this is the main leg. Like it could have been a lower high, lower low, and then lower high, and then sell again, right? I don't know that, right? But here's the deal: I still take this trade to a minimum place, which is, look, not surprising, where we sold from at 9:30. It comes right back to wipe those people out. But it was to induce more liquidity. There is a one on a, well, I caught all this sub-second just so you understand. But this was on a 30-second. I got this highlighted. It's kind of hard to see this, but the goal here when I take this buy is to wipe out people, and then I'm gonna go to a 30 seconds so you can understand. So you're probably like, what are you talking about? Right there, you see that 30-second imbalance right there. See that? So this with the up candles, when I take this buy, see, I first when it came right here impulsively, I bought it, right? And then it came right back down, and it took me out because I had my stop loss moved up, which is, again, I shouldn't. I should always have it, even if I had it below, I'd probably get taken out right there. Look, it goes right to it, right? It's fucking shady. They do that shit on purpose for people like me. But anyways, then the price comes up, comes back into that block, and I like it. And then this is when I take the buy. Okay, I take this buy for where? I want to get above here, and I like that imbalance right there because, again, we sold from there. It has a possibility of going above, but I don't want to fuck around and find out. Remember, these trades that I take, I don't need to find out, but I'm predominantly going to the most logical place for me, at the best, safest place for it without it coming against me. So price comes up, comes right into there, boom. Look at this. So wicks up, and I take this sell, actually. I take this sell and it come down, and I'm trying to break that low, okay? But here's another reason. If I took this sell, it doesn't go below this block right here, which is a problem because I need it to go below. What did it do? It went against me, okay? So no problem. I mean, that's the shit that happens with the way I trade. I don't recommend you trade like this, but I'm just telling you what my story is. So price goes back and wipes out that engineered liquidity and takes out that high, gets back into this 30-minute imbalance, and is back inside that resistance again that I mentioned. And basically all it did is it just wiped out that liquidity and efficiently delivered price a little better. And then even tapped these three up candles on the 15-minute. See that open right there? So it got into there, and I was confident that this price was in control of price. Remember I gave you the story about this low and this high, and how, well, I don't expect it to break this. So when the price comes in here, all right, pops up, the biggest thing for me was that it wiped out all these highs right here. These highs, okay? My intention is to still be bearish and to break this low based off of what we've talked about. So then this sell happens right when I get this retrace back of this. Let me zoom in. It's a 30-second, but this is how I caught it. So I'm not going to show you 1 minute yet, but this price breaks down, price breaks back up, swing high, all right, and then the price literally starts coming down. I'm already manually pushing it in. What does the price do? It comes down, retraces back up into 50% of that candle. Also this last up candle and the bottom of that 30-minute imbalance. Remember, this is that 30-minute imbalance. These are all little signatures that you have to understand of order flow. I'm gonna go back to a 1 minute. You can see it there. See that? See if I showed you on a 1 minute. See that? See how the price comes underneath and comes all the way back up and it tests this. See that? Fucking beautiful, man. Right there. Perfect level. These are exact levels. These are not, a zone. This is a specific level, right? And then lower low, lower high, all the way down. Take it here to this low. Let me show you the trade. This is what I'm the most proud of or wanted to show you because I've already called, that shit. But this is to show you right there the confidence. See the stop losses above there. The entry level is literally at the same level of that 30-minute imbalance. And then price comes right to our target. Not a coincidence that we bought from here. All right. So, beautiful fucking day. Murdered this bitch. And just to show you, here's the deal. You're probably like, well, why didn't you hold it? You know, you're probably thinking, I used to think like this too, but you're probably, man, if you would have held that and held it to here, that would have been amazing. Listen, I don't fucking care. I don't need to be right, or I don't need to be a hero. I mean, yo, this thing has potential of a lot of movement. You're probably like, yo, this is a swing trade position, right? Yes, it is. This is a institutional position. It's a very, very, very high probability swing trade position right here, just like down here was, right? Just like all these higher lows were, right? But I don't care because I keep constantly telling you that these moves happen every day. So, you know, I'm generally trying to catch the 1 to 2 at the minimum, but I'll get to 3 or 4 when I'm, you know, if I'm very focused. I mean, it's, to be honest with you, they laid out today very easily. The ideas, I mean, listen, it could have fucking jammed all the way up. I don't, you know, then it would have been like, what the fuck? It would have been a bad day, obviously, right? Because then it just blows my whole theory. But I'm pretty confident in knowing what is to be anticipated or expected. So then you'll say, okay, so look at this now deeply. This is a high. This is the leg from here to lower low. So we had this price retrace once. Boom, finale. So I only look at this as one retrace and then finale. For that leg, the retracement had 2 drives, or you could say one retracement. So one drive, retracement, second drive, finale. That's that leg. See that leg? That's why I take this sell. So in intensive purposes, what I'm trying to share with you here, I'm sure you get it. So this is actually what it looked like. You see that? You can see that. I don't have to. You can see that. See that shit? That's that leg. But in this leg, you had a low and a retracement. Yeah, the 930 manipulates. That's fine. It's all part of this same price action. And then it retraces back up. So this is all this is just a consolidation phase and distributes, and then finale for that leg. When it comes up, you have a retracement. You have one retracement, and then you have a finale. And then from here, I want it. What does it look like? I had this retracement, 1, 2, 3, finale. Look at how the finale looks like. Notice how the finale is this big ass wick. Notice the finale here is all these down candles pushing down, right? You see that? That's all. Look at the finale here of this leg. It's straight candles down, right? So this is just stuff that you realize of you watching price action for years, right? But super game, all right? But this is the logic that I'm using as well. So that being said, so you'll probably say, well, dude, why didn't you hold this from here to here after under here? Listen, again, this thing can reverse on me. I don't fucking know. But I know when I take this sell, the higher probability of winning this trade to here is very high for me. The probability of me taking this buy and coming up to here is very high for me. The sell to here, very high for me. You get what I'm saying? So, and I don't want to, listen, I don't want to even be trading past 11:30 anyway, right? But the reason why I was feeling myself and I took this was because I understand the lower objectives of where we were. Number 1. Number 2, it was still between a 10:50 and 11:10 time frame, right? So I was like, fuck it, let me just take this and be the last trade. Sure enough. And this sucked. You know, it does suck a little bit, but you have to hold to your targets and be confident in it. So what did it do? I could have just said, well, Roland, why don't you, if you know how the legs work, why don't you just take your trade here? Well, I want to be profitable. I don't need to be right. I used to fucking do shit like that and it would come against me. So I stopped doing that, included in my rules. right? So, but I knew this bitch would come down. I came back and checked it, and I was like, this motherfucker. So you're asking me, why did it stop right here? Well, my advice or opinion is it got into this down wick right here. You see that on the 15 minute? It's almost about 50% of it right there. See that? And if you look at this is a 1 minute. I need to go a 5 minute. You'll see in this 5 minute here, down here, that it doesn't really show well on this time frame. Oh, that's right. It was a 4 hour. But you're inside this downwick. But what was more important about this level was the 4 hour. The 4 hour here. Let me zoom in for you. That's that wick. That's that first drive down. Remember, it drives down, then it comes back up, and it just took that out. When it first came down, it was literally 3/4 of a point below this down candle, this supply block right here, this demand block right here. So you see how this comes literally 3/4 below of a point below this. So the target here would have been not target, but an area of interest would have been that 4 hour down candle, the low of it, which is sitting right here where I'm showing you. So comes down, bounces off from there, okay, bounces off, comes back. I'm not involved with this shit, but okay, we hit to the open of the day right there. We come below it, we come above it, but we come up. So this is that high to lower low to lower high to lower low to lower high. So like in the instance of this leg to this leg, you can see the price action coming down. Okay, doesn't break their blocks above either to the left of the chart. So that's how you know the leg is still continuing. And then this is an example of like a fib level where you did something like this, right? And then this is delineating the actual leg here to retracement. Fuck this high. They want to take out. They put this in purpose there, right? But you notice how you notice when it comes up, it doesn't take out this up block. Look at that. Look at the level right there, very close. Gets to a 61 right here, and then stalls out, and then retraces down. When you take this sell, if you did, where would your target would be generally this low. Look where it came to the perfect point. I'm sure we'll keep going, but I'm just explaining this. So it has an internal high inside, and that's part of the algorithm's fuel, right, for the fire, right? And then what else I was gonna say? Price came to that gap as well. That was also in this picture here. So if you were selling from here or from here, a goal could have been this gap right here too. This gap right here. And then look how the bodies sell from right there on the gap right there. See that? There's an imbalance right here, plus that gap, plus it's the open. This is a beautiful trade right here. I'm not even involved, but obviously they do this at the end of the day. But you see that right there? You got that imbalance. It's a 1 minute, right? Oh, it's a 5 minute. You got this imbalance right here. Pops in, hits the open. The bodies are literally at the gap itself. Pushes down. So you could have got in right here. You didn't even have to get in somewhere here. But inversion imbalance right here. I'm probably talking way too much right now. See how the price is contained in there? Look at that. Look at the price. Look how the highs are literally the same level. See that? So this is a form of resistance. This up candle, it's an inversion imbalance. You don't look at it to buy up. You're bearish. So you're looking for this to be resistance, right? How long have I been doing this? Oh shit, 34 minutes. Fuck. All right, so that's that. And then look at Dow. I told you right to that level. Beautiful. I put that out yesterday. Put that high there, and I said that there was a remaining imbalance right there. I'm gonna zoom in for you. Oh, it's like, oh shit. I got this scroll on this thing. Is crazy. Look. Oh shit. See that? See that remaining? See that there's an imbalance right there, right? But This candle comes all the way up. It doesn't hit the bottom and seal it. So I've had that level this whole fucking time. I dragged it out yesterday for you with that high that I drew out for you. And look where we went. We went straight up to it. We sealed it. And then we're on our way down. So fucking gorgeous, dude. And then damn sloppy as fuck. Look at this shit. I can't even recognize Dow anymore. That's just why I stopped trading Dow. But at the same time, look at the way Dow moved though, which is pretty awesome at the same time because look how it shot up at 8:30, shoots up, fine, shoots down, takes liquidity. I mean, it doesn't even play around. It just goes right to it. I love that about Dow. This fucking speaker right here. See this speaker right here? Constant pattern. This is why I used to trade it because I recognized it all the time. You know, even from here. Look at this. Look at this shit, yo. Can't make this shit up, man. You know what I'm saying? So, like, with this understanding, I'm gonna delete that back. Just training, visually training your eyes. But this is why I used to trade them because when they used to go back and forth, I used to love it because I wasn't afraid to take the trade, even if it took liquidity because it would just bounce right up the different direction. So, anyways, 8:30 pushes up, wipes out this liquidity there, right? Shoots up, shoots down, wipes out that low. Look, I mean, look at this. This is super obvious, right? Shoots down, comes up. So if you sold from here, I mean, I don't really have any way to show you to catch that. So unless you were just watching momentum, but let me go to 1 minute. Well, it's 5. I got to keep it 5 minute. So all right. Price bounces. Okay, so there's a gap here, right? So we got two gaps sitting here with the opening day gap. Obviously, this is purple and this is gray. So shoot, from here to here is an obvious sell trade. And then once it comes down lower, it gets into the day of the gap. Okay, could have been a buy right there because you understood that you took out that liquidity. And you could have still been bearish, but look at Dow made higher highs. So to explain what's going on here, might sound like I'm bouncing around, but the purpose is that Nas and S&P made lower highs and are the leading in the price action. Dow, look at fucking Dow, man. I mean, came down and then came back all the way up here initially, right? But then it ended up breaking that high. But look at we didn't get that with S&P and Nas. So going back to this, I gotta be done, dude. Okay, then the price. So buying here to here was probably reasonable. Getting into a resistance of blocks here, or if you waited for that to get tapped, you would have been asked out. But anyways, price came down one more time right here, right? See that? Wipes out that liquidity. We're sitting inside that open day gap, and we're not breaking these candles to the left of the chart, so this is holding as support as well. See how they're coming in right there, and then price shoots all the way up. So if you bought this all the way up here, where would you take this? Well, obviously above here. You could say above here. You could say 50% of that wick, and so on. And then sure enough, price. Let me go to 1 minute because that's crazy. This is why I don't fuck with Dow anymore, man. They're getting I noticed them getting sloppier. Like they're really good in trends, but like, look at this shit. Fuck. You know, look at that. God damn. Fucking street price straight up. Obviously 930 shoots the price up here. All right, so you have this 830 breakdown, right? Much easier on a 1 minute. That's why I don't understand how people could just trade on a 5 minute, 15 minute. I don't understand how. Like I need to see clarity even through seconds. I mean, whatever. Anyways, price comes down here. See how this controls price for the moment, but Dow doesn't follow rules. So, but in this case, Nas was still coming down. So we came down, took that liquidity, shot all the way up, got into the wick. Beautiful. Look at that. Look at that shit. And then if you took that sell, you could have took that where? Well, obviously 930 pushes it up. You could have took it to anywhere. 930 my level would have been preferably here because this is where the 930 buy candle happened, right? So this would have been perfect for me. But extends down a little bit. Look where it comes, right to the open again of the day, of the gap, the high of the open day gap. And from there, if this doesn't break here, then it's fucking buying, right? And that's just generally speaking, shook everybody out. So shook everybody up, shook everybody down, right? Came back up, made a new high. Now your intention would maybe be to take out that high. But the thing is we're bullish. I'm sorry, we're still bullish, but we're looking for a bearish scenario. But Dow, they are lagging because they are needing to accomplish this level that I've got highlighted with the high right there of September 20th, right there, right? So, boom. Price comes up, retraces all the way back. Again, I'm not even going to show you candles. Retraces all the way back, gets into this down candle. See how that's that down wick? Looking very close to 50% of that. Look at that. Shook them out. So we sold, we wiped out buyers. We bought, wiped out sellers. We sold, wiped out buyers. We bought, wiped out sellers. We sold, wiped out buyers. We bought, wiped out sellers. You get the point of what I'm saying is that that's why I liked Dow. That's why I was always trading Dow, because it's shit like this. But the more that I wanted to be more in a process mode and not sort of speak gamble, I guess you could say, I had to leave these fuckers. I have to leave these motherfuckers alone. But I still understand what they're doing. So they finally make it here, retrace back, finally hit the finale here, and then we get this. We now get this break, like for them the end of the day. So, and then I mentioned to you dollar would slowly come up if we would be coming down, right? So that's pretty much what we did there. And then also the divergence I mentioned here. So we had that higher high with Dow here and lower highs here. And then we had a higher low with Dow here and we had lower lows here. So that was, this is explaining that buy back up for us in NAS right here and S&P, right? So nice price action, little details you need to follow. And then here again, another higher low here with lower lows here. And then for me, this would be another buy if I was trading, but I wasn't. But that would be another buy right there. So, what was I gonna say? You know, when you're using the 30-second tool here, you know, again, I not rely on it, but look at this high wick right there. We come down, finally hit an oversold, and then bounces up. But look where it comes. That's why this is sloppy in between. This hits an oversold here, bounces all the way up to right there. That's why I took it out also. Just confluence, right? Just part of price action. And then I looked at this. I said, okay, let's sell it. All right, failed. And then when it hits this oversold, I'm like, fuck, why has it got to be so perfect? Can't you just keep going through? Well, I was hoping to break this low, but I failed that trade. But then price pops all the way back up. Look at that. Higher high here. Okay. And it's a higher high from here. So that's a divergence right there. See that? I don't have to draw it out. You can see that. Overbought. Boom. Takes off. Continuously comes down. When you get to, if you're using this indicator, sometimes it'll obviously hit oversold many times and it will just stay under the 50% level, and will be constantly keep, not working for you. So that's why we say don't use this indicator. But I just use it at key moments and times, and I'm comfortable with it. I know how to use it. Just like this oversold on the 4 hour. Look at this, dude. Like if this doesn't tell you it's gonna start selling, then I don't know what does. Right? So all right, I hope this helps you guys. Take care until tomorrow. God bless.